Have you ever found yourself wondering what Bitcoin is and whether you should invest in it? Ever feel like you're swimming in a sea of information, yet still struggling to understand this popular yet elusive cryptocurrency? You've heard the buzz, the success stories, the warnings, but what does it all mean? Is Bitcoin a sound investment, or is it just another bubble waiting to burst? Well, you're not alone, and today we are going to demystify Bitcoin for you. So, what exactly is Bitcoin? To understand that, we need to go back to its origins. Picture this. The world is in the grip of a financial crisis. Banks are failing, economies are teetering on the brink, and trust in traditional financial institutions is at an all-time low. It's the year 2008. In the midst of this turmoil, a 9-page white paper appears on a niche cryptography mailing list. The author, an enigmatic individual or perhaps a group of individuals going by the pseudonym Satoshi Nakamoto. This mysterious Nakamoto introduces Bitcoin, a peer-to-peer electronic cash system. Bitcoin is revolutionary because it doesn't rely on a central authority like a bank or government. Instead, it's decentralized, maintained by a network of computers or nodes spread across the globe. But why create Bitcoin? Nakamoto's white paper suggests a disillusionment with the traditional banking system, particularly its propensity to cause financial crises. Bitcoin, with its limited supply of 21 million coins and decentralized nature, is presented as a solution to these systemic problems. In January of 2009, Nakamoto released the first version of the Bitcoin software and mined the first block of the Bitcoin blockchain, fittingly known as the Genesis block. Encoded in this block was a message that read, "The time 03 Jan 2009 Chancellor on brink of second bailout for banks." Now that we understand where Bitcoin came from, let's delve into what it actually is. In simple terms, Bitcoin is digital money. But it's not just any digital money, it's a revolutionary form of currency that has been making waves since its inception in 2009. You see, unlike traditional money, Bitcoin isn't issued or regulated by any government or central bank. Instead, it operates on a technology known as blockchain. Think of blockchain as a digital ledger, where all Bitcoin transactions are recorded and verified by a network of computers across the globe. This decentralization is one of the defining characteristics of Bitcoin, and it's one of the reasons why it's so unique. But what does it mean when we say Bitcoin is decentralized? Well, in a traditional banking system, transactions are processed by a central authority. With Bitcoin, there's no central authority. The transactions are verified by the network of computers I mentioned earlier, also known as miners. This means that no single entity has control over the currency, making it resistant to censorship and interference. Now, you might be wondering about the supply of Bitcoin. Is it infinite? The answer is no. The total number of Bitcoins that will ever exist is capped at 21 million. This limited supply is another factor that sets Bitcoin apart from traditional currencies, which can be printed at will by central banks. The scarcity of Bitcoin is what gives it value, much like gold or other precious resources. The idea is that as the supply of Bitcoin decreases and demand increases, the value of each Bitcoin will rise. This is why people are willing to invest large sums of money to acquire even a fraction of a Bitcoin. But there's more to Bitcoin than its digital nature, the blockchain technology, and its decentralized aspect. It's also about the potential it holds to change the way we think about and use money. So Bitcoin is a new kind of money, but why do people invest in it? Bitcoin's value has skyrocketed over the years, turning early investors into millionaires. This digital gold rush has captivated the world, but what does it mean for you as an investor? Let's delve into the investment side of Bitcoin. The story of Bitcoin's value is a tale of dramatic peaks and valleys. It's a story of a digital currency that was worth mere pennies when it was first introduced, then soared to nearly $20,000 by the end of 2017, only to crash dramatically in the following months. This volatility is both Bitcoin's allure and its danger. Bitcoin's meteoric rise has turned modest investments into fortunes. Early adopters who bought Bitcoin for a few dollars or even pennies and held onto their digital assets have seen returns that are literally off the charts. But for every Bitcoin millionaire, there are countless others who've lost money. Bitcoin is not like traditional investments. It's not backed by a company's performance or a government's promise. Its value is determined by supply and demand dynamics in the market. This makes Bitcoin a high-risk, high-reward investment. There's also the issue of security. While Bitcoin transactions are secure and transparent, the platforms where people buy and sell Bitcoin can be vulnerable. High-profile hacks have led to millions of dollars in Bitcoin being stolen. Careful management of your Bitcoin assets is crucial. Lastly, remember that Bitcoin is still a relatively new phenomenon. It's less than 15 years old, and its future is uncertain. Regulatory changes, technological advances, and market dynamics can all affect Bitcoin's value. But despite these risks, many investors see potential in Bitcoin. Its finite supply, there will only ever be 21 million Bitcoins, and its growing acceptance as a form of payment suggests that Bitcoin could continue to grow in value. Investing in Bitcoin can be a rollercoaster ride, but is it worth it? That's a question only you can answer. It's essential to do your own research, understand the risks, and decide whether this digital frontier is right for you. The million-dollar question: should you invest in Bitcoin? Now, this isn't a straightforward yes or no answer. It's a decision that depends on a number of factors, including your financial goals, risk tolerance, and investment horizon. Let's delve into the pros and cons. On the positive side, Bitcoin has shown impressive growth since its inception. If you had invested a few $100s in Bitcoin back in the early days, you'd be sitting on a fortune today. Its decentralized nature also offers a sense of security against the whims of traditional banking systems, making it an appealing option for those seeking financial independence. However, Bitcoin isn't without its downsides. Its value is extremely volatile, swinging wildly in both directions. This volatility can mean significant gains, but it can also mean substantial losses. If you're someone who loses sleep over your investments, Bitcoin might not be the right choice for you. Furthermore, while Bitcoin has been around for over a decade, it's still a relatively new and uncharted territory in the financial world. This means that it's subject to regulatory changes that could impact its value. And let's not forget that while Bitcoin has seen impressive growth, past performance is not a guarantee of future results. When considering investing in Bitcoin, it's crucial to do your homework. Understand how cryptocurrencies work. Keep up to date with the latest news and developments. And consider consulting with a financial advisor. Remember, Bitcoin should be part of a diversified portfolio, not the entire portfolio. It's also important to consider your investment horizon. Bitcoin, like any other investment, should be viewed as a long-term commitment. If you're looking for a quick buck, you might be disappointed. But if you're willing to hold on to your investment for several years, you might see substantial returns. While Bitcoin offers exciting possibilities, it's important to remember that it's not a one-size-fits-all investment. It could be a great choice for one person and a terrible one for another. So, before you dive in, make sure you've thoroughly researched and understood what you're getting into. So, we've learned a lot about Bitcoin today. We began our journey by peeling back the layers of this digital currency, diving deep into its core to understand what Bitcoin truly is. It's more than just a buzzword or a get-rich-quick scheme. It's a decentralized form of money that operates on a technology called blockchain. This technology is what allows Bitcoin to exist without a central authority, giving it its unique, democratic appeal. Then, we traveled back in time to the birth of Bitcoin. We discovered that it was created in the midst of the 2008 financial crisis by an anonymous entity named Satoshi Nakamoto. His, her, or their identity remains a mystery to this day, but their revolutionary invention has certainly left a lasting impact on the world. We also delved into the investment side of Bitcoin. We learned that while it can be a volatile asset, it has also proven to be a lucrative one for many early adopters. Some view it as digital gold, a hedge against traditional financial systems, while others see it as a speculative asset with potential for high rewards. Then came the question, should you invest in Bitcoin? We discovered that there's no one-size-fits-all answer to this. It depends on your financial situation, your risk tolerance, and your belief in the technology. We also discussed the importance of doing your own research, seeking professional advice, and only investing what you can afford to lose. In the end, whether you decide to invest in Bitcoin is a personal decision. But one thing is for certain, understanding Bitcoin and the technology behind it is crucial. It's not just about making money, it's about understanding a technology that has the potential to change the world, to revolutionize the way we do transactions, and to democratize financial systems. Whether or not you decide to invest in Bitcoin, understanding this groundbreaking technology is a step towards a more informed financial future.